What's going on, guys? It's Justin from Push and Profit. Hope everyone's having a beautiful day today. So in this video, I want to go over some patterns that I believe every trader should get familiar with, especially if you want to become successful or be able to make a profit. Because at the end of the day, everyone goes into trading because they want to make money. No one goes into this because they want to lose money. At the end of the day, our goal is to, build our wealth, right? So, based on my style of trading, I do technical analysis. So you have to be very analytical, right? And you have to be able to identify what's going on in the screen. So I want to reveal some common patterns that every trader should be able to identify so you guys could see what opportunities present themselves. And these are patterns that repeatedly present themselves when it comes to trading in the stock market. So what we're gonna do is hop into my computer screen and just kind of briefly go over all these patterns. We have this little PowerPoint that I made, right? It looks a little cute and a little beautiful, right? But these are trading patterns that you must learn, right? And so we're gonna get started right into it, right? All right, going on to the first slide, we're going to be talking about ascending triangles, right? So these are a bullish type of pattern and they are a continuation. So let me explain this. So this triangle usually appears during an upward trend and is regarded as a continuation pattern, right? And I'm going to explain that a little bit better. So if you guys know, it's a bullish pattern. So basically right here we have this resistance line drawn out, right? And I have a video talking about supports and resistances. So if you guys are unfamiliar with that, definitely check out that video or just Google it, right? And then we also have this trend line, right? So there's a difference between trend lines and supports and resistances, right? So obviously the white is representing the stock. So we could see that as in this example right here of the ascending triangle, the stock is going up, it hits this resistance, falls down, bounces off the trend line, hits this resistance, bounces off, hits this resistance. And what makes this a continuation pattern is that the fact that if it breaks above this resistance, it's just going to break out and continue going up, right? And it's just a continuation because, little by little, the ticker or the stock is going up because you see it's going up, up, up. So it's just going to continue going up, right? So that's really just that. Now, real quick before we go into the next pattern, this is just a friendly reminder to hit that like button because it really does help with the YouTube algorithm and spread this videos for others to learn as well. So make sure to do your part in being a good person. You should be familiar with is the bearish symmetric triangle, and this could also have an inverse with the bullish symmetric triangle, which would be like the reverse of this, right? A lot of these patterns, they have reverses, right, or inverses or opposites, right? You have the bear and the bull version, right? So this one, the bearish, is obviously the bearish pattern of this, and this is a continuation, right? So this is a symmetrical triangle pattern that is easy to spot thanks to, its distinctive shape, which is developed by two trend lines. Notice how there's no supports or resistances. It's a trend line sloping down and another trend line sloping up. So this pattern is, of course, just drawn by those trend lines with their peaks. And then basically, once it breaks the trend line, it's just going to have a breakout going significantly down. So we could see the stock falls down, bounces off this trend line. You could have bought here, sold over here because, it touched this trend line and it didn't break above it. It's falling into this trend line, right? Starts going down, touches this trend line, starts bouncing up, comes down. Had it just bounced up, maybe, it could have taken that profit, but we always wait for confirmation. I talk about that in a lot of my videos. We don't just buy just because it touched the trend line. We want to see it touch the trend line and then start coming up, right? Because what happens if you buy at the trend line or support? You don't know which direction it's going to go. It could you have to wait, right? Because it could go down, it could go up. So, I typically wait for things to go a little up before I get in. For example, if the stock is going in, I'm not going to buy right here. I'm probably going to buy right here because it's showing me, okay, this is probably going to go up. And then, then I'll take my profits over here. So same example, right? Or same concept. It touches this trend line. We would wait for confirmation of it going up. But in this particular pattern, it does not go up. It breaks the trend line, which just shows that this is going to be on a downward trend and things are going to go down from here. So again, in this slide, I kind of give, a little brief explanation of why you want to wait for confirmation. But really, this is just a pattern, right, of the bearish symmetric triangle. Next, we have a double top, right? And basically, it's just, I'm not going to read this whole thing because it's pretty lengthy. If you guys want to have access to this PowerPoint, I am going to include a downloadable link to this whole entire PowerPoint. and our free Facebook group, our Push and Profit Facebook group. Is really just a community of individuals who are interested in learning and trading in the stock market. So again, you guys are welcome to join our group. We're rapidly growing, and in that group, you'll have access to this file. So if you guys want to use this as a reference or a guideline, if you guys just want to study. So I'm not going to read this whole thing, but I'm just going to explain what's going on in this scenario, right? So right here, we obviously see a support, and then right here is going to be a resistance. Now, I didn't draw a resistance line. You could kind of just tell by I illustrated it with the kind of red little tips. But if you really wanted to, you could say, I could draw it for you guys. Cool, right? It's not perfectly straight, but I'm not an artist, right? Cool. All right, so stock is trending upwards. It's breaking through this support. Boom, touches this resistance, right? It just cannot go past here. Falls down, touches the support, starts coming back up, touches this resistance again, falls down to the support. Now we don't know, is it going to go up or go down? That's where we wait for confirmation before entering the trade. However, if it breaks this support, it's most likely just going to have that reversing trend going down. So bear in mind, right? Keep that in mind. So that's a double top pattern. And next we have a falling wedge. Now, despite the name of falling, this is actually a bullish pattern, right? So the falling wedge is a series of lower highs and slightly lower lows, yet the overall price squeezing together at the wedge condenses together causes a pop once it meets the apex point as shown, right? So for example, we have this stock going up, touches this trend line, going down, up, down, basically bouncing within the channel of this trend line. And if it breaks through this trend line, then that's what's going to be a breakout, and we're most likely going to see more of an uptrend, which is why it is a bullish pattern, right? So next we have the cup and handle pattern. Now this pattern is very, very unique, right? And you could obviously tell because it looks like a little teacup or a coffee cup, whichever you prefer to drink, right? I drink neither. I just drink water. But so it's really just a cup and handle pattern. It's called a cup and handle pattern. Sorry, I like stuttered right there. And it gets its name from its obvious pattern that it makes on the chart. You can see that this curve right here makes a U shape, and then right here this kind of makes a handle, giving it that little name. So basically, and this is kind of complex, right? But basically, a stock trends upward, it touches this resistance, right? You can't break above it. It starts coming down. This becomes a support, and support turns in old support, and support turns into resistance, and resistance turns into support, depending on the time period. So at the moment, right here, this is a support. It goes up. It cannot break this area, so this also becomes a resistant area. So let me go ahead and draw like a line. So it becomes a resistant area of resistance. It starts coming down, makes this new low, right? So that becomes a level of support, right? Then it comes back up, and remember, this was a support back then, so old support becomes new resistance. So then this becomes a resistant and just cannot break above it. Comes back down, touches this support, right? Because it was support over here, and then it ends up breaking. It breaks past this resistance area right here and continues going up, and then it goes back to this resistance area that we had over at this time. Then it comes back down, and it comes back down to this used to be a resistance area, now it's support, right? Then it starts coming back up, it breaks through this area of resistance, then it goes back to that previous level of resistance that we saw all the way over here. Then it forms this little channel where it's just bouncing up, bouncing up, bouncing up and down, right? However, once it breaks this channel and starts going up, okay, it seems like things are going up. And once it breaks this area right here of resistance, then we're definitely on a confirmation of a bullish uptrend, right? Now, again, very unique pattern, very complicated. You guys could see I drew so much on it. And just, kind of shows you that stocks, they just don't just have one level of support and resistance. They have multiple levels of supports and resistance. A stock could be like here, this is resistance, falls back to the support, touches this is resistance, this becomes support. It's just like stocks do this, right? And kind of making my little PowerPoint look ugly, but yeah, this is just the reality of how stocks look, right? So let's go ahead and go into the next slide. And right here we have the head and shoulders top. Now again, a lot of these patterns, they have inverses. You could have a reverse head and shoulders, or some people even call it a head and shoulders bottom, whichever you prefer. And it would really just be this whole entire pattern flipped upside down. But right here we're looking at the top, which is a bearish, right? Pattern. So here it's a breakdown pattern too. So most of the time, head and shoulders are not perfectly shaped. The formation is slightly tilted upwards or downward. One shoulder, and these are the shoulders right here, these peaks, right? Let me go ahead and label these, even though they're already labeled, but I just like drawing for fun, right? I'm not an artist, but you know, okay, so one shoulder may appear to droop on many charts, and you know, the two shoulders may appear broader than the other, which is caused by just the time involved with the formation of the peaks. So basically what I'm trying to say is that and I've got the wrong tool, that you know, this is an illustration of a perfect example of a head and shoulders. Head and shoulders aren't always going to be this perfect because obviously stocks, they don't move perfectly. So you might see a head and shoulders where this peak right here might be a little wider than this peak. So this is kind of a hard pattern to identify just because it's never perfectly drawn. But basically the basis is pretty simple, right? Let's go ahead and get my pen or my little drawing tool. So basically you go up to this peak right here, which becomes a resistance. So let's just draw that, right? And I'm going to draw it all the way so you guys could see. Falls back down to this support level, breaks through this resistance, makes a new level of resistance, right? Cool. So you're like, okay, the stock's on an uptrend, but then, you know, after this resistance, it starts coming down, breaks that support that is established, which was resistance before, starts coming back down to this support level, comes back up to this resistance level that didn't establish itself as a support, right? And then it just bounces back down and it breaks through the initial level of support, right? And then from there, you know, things just continue trading downwards. So again, you know, like I said, stocks aren't always going to be perfect. So this is why these patterns are really good examples, because you're not going to always see it perfectly. You got to be able to identify it. And also I really like these patterns because they kind of demonstrate again that stocks don't move perfectly up and down. You know, they have multiple levels of supports and resistances, you know. So that's pretty much how that goes. So let's go into the next slide, right? So this is the triple bottom pattern. This is a bullish pattern, and it's a breakout pattern. The triple bottom pattern is used as a technical analysis as a predictor of a reversal or reverse position following a long downward trend, right? So basically, you know, just to break it down a little easier, you have a stock falling down, and it establishes this area of support, comes back up, and it can't break this resistance that it had. Comes back down, touches the support again, cool. Comes back up, touches this resistance, comes back down, and then, you know, so forth. And then once it breaks this area of resistance, then we have this big breakout pattern, right? Where, you know, it looks like most likely things are going to continue going on an uptrend. Personally, these are one of my favorite patterns to trade, just because there's so much potential if you know how to identify these, right? For example, you can make money when a stock goes up, you can make money when a stock goes down, believe it or not. You could short a stock, you could buy puts on the stock. I'm not going to explain that in this video, but basically you could make money, you know, when a stock comes down. So, you know, let's say you're at this area right here. You realize that this is a support, and then once you see that the stock is kind of over here already establishing that this is a support, you could buy over here, and I'm gonna write this out, and ride it all the way up to this resistance, right? And you'd probably know that this was a resistance because it probably was a resistance some other time, right? Or maybe it was a support from the past. Cool. So you sell right here, right? So you make your profits from here to here. Then from here, you know, once it starts coming back down, establishing that is definitely on a downtrend, so maybe right here, you could short the stock or buy puts, meaning making money while the stock goes down, and then, you know, take your profits over here with the established support, and then, you know, repeat the same process over again. You know, buy, sell, sell, buy, right? I know that's kind of hard to understand for people who are not familiar with that whole concept of making money when the stock goes down, but just just understand that you can make money when the stock goes down. So I just love this pattern because it's very repetitive and you could definitely make some good profits, just following this pattern, just going back and forth with it. Pretty much it as far as the patterns that I wanted to explain to you guys. These are probably one of the most common patterns out there. Again, there are multiple patterns. This is just really just the basics of them. But something that you also have to understand is, yeah, in this video I showed you guys multiple patterns, but what I think is most important besides, memorizing the patterns is really just being able to identify supports and resistances, support lines, resistant lines, and also trend lines, those are the most fundamental or most important parts, because if you don't understand that, then you're not going to understand patterns. You have to understand the foundation, right? Because the patterns basically map themselves out from these trend lines and supports and resistance lines. Stocks do this or they do this, right? So you don't necessarily have to remember the pattern itself, but just like I said, go ahead and teach yourself more on supports and resistances. I have a couple of videos going over supports and resistances. I have a couple of videos talking about trend lines. So definitely go ahead and check out those videos. Again, I encourage you guys to check out other people's videos as well. You guys don't have to watch mine. Just as long as you guys, just as long as you guys educate yourselves and learn as much as you possibly can. With that being said, guys, make sure to hit that like button if you haven't done so already. I know I already mentioned that, but hey, I gotta, get this video to have some likes. Also, consider subscribing to the channel. I do make multiple videos on, day trading and also just basically on technical analysis, my experience in the stock market, things like that. And I'm constantly uploading new strategies to a certain playlists. I have a playlist on day trading strategies, so definitely consider checking those videos out. And also, again, if you guys want this whole PowerPoint, you could go ahead and click the link in the description to join our free Facebook group and download this PowerPoint, study it for yourself if you like. And of course, the PowerPoint isn't gonna have my ugly drawings, but it's okay. You guys can make your own ugly drawings if you like. With that being said, guys, my name is Justin from Push and Profit. Hope everyone's having a beautiful day today, and I'm out. Peace.